Are you a locum professional working in different states, but unsure how to handle the complex web of income taxes? You could be leaving money on the table or worse, inviting an audit. In this episode, I'll break down the key tax considerations, filing tips, and strategies to keep your tax bill in check. Welcome to the Locum CPA Podcast, where we talk about the business of being a locum tenens medical professional. My name is Stephen Lee. I'm a certified public accountant out of Chicago, Illinois. As a locum professional, you may already know that different states have different tax rules. But when you're working in multiple states, things can get complicated very quickly. Here's the basic principle. You owe income tax to each state where you perform services. If you're working in 3 different states this year, you'll likely need to file in all 3 states. For example, let's say you're working in California, Texas, and New York. California has a high state income tax. New York has a similar structure, but Texas doesn't have a state income tax at all. This means you'll need to track your income carefully to allocate it to each state where you work. The next question is, how do you allocate your income properly? Most states expect you to file a non-resident tax return for the income you earned while you were working there. You'll need to calculate the number of days worked in each state and allocate your income based on that time. For example, if you worked in California for 100 days and New York for 50 days, you'll allocate roughly 2/3 of your income to California and 1/3 to New York. Be sure you keep detailed records of your time in each state, including contracts, travel logs, or any other official documents that can show your work schedule. If you're a locum professional, you'll want my top tips on how to start and operate your locums practice. The link is below in the comments section, so go ahead and check that out. Download my top tips on how to start and operate your locums practice. Now, you might be wondering, what if you live in one state but work in another? That's where state residency comes into play. You'll typically owe taxes to your home state on your entire income for all states combined. However, many states offer a credit for taxes paid to another state. This is to prevent double taxation where you pay tax twice on the same income. Make sure to check out my next video where I'll take a deeper dive into state residency and how to determine your state of residence if you are a busy traveling locum professional. So let's go back to how the state credit works. If you're a resident of one state but earn income in another state, your resident state may allow you to claim a credit for the taxes paid to the other state. Remember, not all states allow this. You have to check with a local tax professional or do some research to see if your home state offers that credit. This credit typically reduces your home state's tax liability by the amount of taxes you paid to another state where you worked. It prevents double taxation on the same income at both the state and resident levels. So check if your state offers this type of credit to offset taxes paid to a different state. A few important notes here. Not all states have the same rule. Some states have reciprocity agreements that simplify tax filing between neighboring states, like Illinois and Wisconsin, for example. States without income tax, for example, like Texas, Florida, the state of Washington, don't offer these credits since they don't have an income tax. But once again, it's always best to consult a CPA or a tax advisor for specific rules based on states you work in. Another important thing is estimated tax payments and possible IRS complications. When you're working in multiple states, you'll need to pay estimated quarterly taxes to each state. The IRS and state tax authorities don't want you to wait until the end of the year to settle your tax bill. Make sure you stay on top of those deadlines. Reference one of my previous videos on quarterly estimated tax payments to make sure you're staying on top and how to calculate that for not only at the federal level to the IRS, but also to the state level. And if you underpay or miss any of those quarterly deadlines, you'll face penalties and interest. It's crucial that you plan ahead. Before you begin your locums contract, whether in your home state or in another state, remember to consult a CPA or a tax professional to assist in calculating your quarterly estimates for both your state and federal earned income. The CPA should have some good advice in regards to how to track that and how to calculate that and when and where to submit those quarterly taxes. I hope this breakdown was helpful for you to clarify some of the tax challenges you might face as a busy locum professional working in multiple states. Remember, keeping good records and working with a knowledgeable tax advisor are your best tools to avoid any issue. If you found this video helpful, don't forget to like and subscribe to the channel for more tax tips and financial advice for locum professionals. And if you have any questions, drop them in the comments below, and I'll do my best to answer them. See you next time. Bye.